The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes, and we want to talk taxes with you. So if you have any questions or comments, you can give us a call at 803-0930. 803-0930, star 930 on a cell phone. You can text us at 3930 because we want to help you. And I'm from EG Tax. We have all of our area offices open today till 5, and our McKinley Mall office is open tomorrow during normal mall hours, and the rest of the week we're all open 9 to 9. So if you need the best tax help and you're sitting there pulling your hair out, you know where to call. You can come see EG Tax. I got Tiffany Fabian. I just drug out of the office. Hey, Tiff.
Hey there, Esther. Happy Saturday.
It's
so nice
beautiful
to see
out.
the sun.
It is so beautiful out. What a winter.
What a winter. It's
been a great winter.
Well, Farmer's Almanac said it was going to be a really mild winter.
Well, then I don't know what that Farmer's Almanac knows, but I'm glad that it was.
Yeah.
Okay, you know what we're talking about today? The New York State return is a very important return because as a New York State resident, you guys know that you're paying a lot of taxes, but a lot of people don't know some of the adjustments that they need to make to their New York State return, credits that they can take to save all kinds of money. And so we kind of thought we'd talk today about the New York State return, kind of give it homage here. And the first, and again, if you got questions, you don't have to talk about New York State, but 803-0930, 803-0930, star 930 on a cell phone, text us at 3930.
I was doing a Virginia tax return the other day for a professor. And in Virginia, they also let you take some of the property taxes that you miss on the federal because of the new law, because of the SALT. But if you make a lot of money, they kibosh it on the Virginia return. And so she was too much money and it was gone. Yep. So she couldn't take it on the federal or
I just
the state.
did a Virginia return today, which is an interesting thing. But okay, so first of all, your New York State return, basically your federal return, the same income and information that's on the federal return carries forward to the New York State return. Then they make you add and subtract based upon some of the changes in the law. For instance, if you are somebody that's like, for instance, an Erie County worker and you are contributing to your pension, would be similar to a 401k plan, which is called a 414H contribution, then you have to add back in the money that you've contributed through your employer if you're, like, for instance, an Erie County employee. That's an addition on New York State. And if you don't add it in, it ends up being a bill you're going to get.
A nasty gram
and
from New
they're
York.
going to sock you with penalties and interest like from here to kingdom come. And as a matter of fact, some W-2s were incorrect. Remember, they didn't have that?
The Amherst police and some of the school districts, they didn't have the 414H.
And so you wouldn't know, and then you didn't put it on. So you want to make sure if you do work for Amherst that you've put that 414H adjustment into New York State.
Right. That's exactly right.
All right. The other thing is if you have municipal bonds.
Sometimes that offers you the ability, don't forget to get the retirement savers credit. So if you put money into the 414H, you might be privy to the federal,
which is a federal,
right, the 8880.
The other thing that people miss is if you have, let's say you've got a brokerage account and your stockbroker's been buying municipal bonds, and you got an Arizona bond and you got a Texas bond and you got bonds in Virginia. Even though those are tax-free on the federal, on New York State, you have to add back in the interest that you're getting from non-New York State municipal bonds on the New York State return.
Correct. Yep.
Or else it can be bad. All right. Now, here's some of the things that you get to subtract when you're carrying forward everything. Is if you have put money into a 529 plan for yourself or a dependent, that is a subtraction on New York State when you contribute to 529 plans for college. If you are somebody that has a pension or annuity and you're over the age of 59 and a half, and it's a non-federal, state, or municipal pension, then the first $20,000 you get from either yourself or your spouse if you're filing a joint return. So potentially you could subtract $40,000. It's the subtraction on the New York State return.
That's right.
And if you're a municipal employee, federal employee, or state employee, regardless of your age, the whole thing is tax exempt on New York State.
That's right. If federal, you get it all backed away.
Right. Not on federal.
On the state,
you get it all back away.
I mean, if you have a federal pension.
Right, if you have thank you.
Yeah.
But people go, I heard today it's federal.
Sorry.
Yeah,
Sorry.
so anyway, those are just something to wet your whistle with. We're going to talk to you on the phone, 8030930, 8030930, star 930 on a cell phone. Text us at 3930, and we're going to go to Mike. Hey, Mike, how can we help you, sir?
Yeah, my question deals with HSA contributions in Form 8889.
Uh-huh.
The question is this: if you make pre-tax contributions through an employer salary reduction plan, both employer and employee, to fund the HSA account, are you required to fill out that Form 8889?
Yes, for your distributions.
Right.
For the distribution,
Yeah.
not for
Not for the contributions.
distribution throughout the year.
Right,
for
because
the-
it's on your W-2.
Form. Because,
Coded with a W.
okay, and I guess the question is this, too. With respect to that Form 8889, if you make it with after-tax contributions, you would have to fill out that form in order to get the deduction.
Correct.
Right, because you want to take it as a
An
deduction.
adjustment to income.
Right.
Right, okay.
Yeah, I just did one of those the other day. Somebody opened up their checkbook and put extra money into their HSA. So then you want to fill out the 8889.
Because then you get, just like almost a contribution to an IRA then.
So you were right, Mike.
Okay, Mike?
Okay, thank you very much.
Thank you, sir.
He knew.
Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We'll talk to Ken. Hi, Ken.
Hello.
Hello.
What's happening?
So 3 years ago, my company gave me a modest award for doing something well, and it was called the restricted stock unit. It was a small number of stock shares. 3 years later, 2019, they vest, and I'm wondering, as I'm doing my 2019 taxes, how does this enter into my tax filing?
Did you sell them?
No, I just let them sit there.
Okay, well, until you sell them, there's nothing you have to do.
Gotcha. So I'm not looking for any paperwork or anything like that?
Nope.
They're transparent.
Very good question.
Okay?
Because that happens often.
All right.
Make sure you keep track of your basis, though.
Okay.
Okay.
Because when you do
Thank you.
sell it, you're going to have to put what it originally cost you, all those dividends that you've paid taxes on throughout the years, and all the capital gains. And that's what Esther means about keeping track of
Right,
your
you
basis.
got to, and that's really important. Now, if you bought it through a broker, the broker is required to keep track of the basis for you,
Right,
which makes it
unless-
awfully nice.
Unless you transfer it sometimes.
Okay, let's go to Dan quickly. Hi, Dan. How can we help you, sir?
Yes, I'm looking at my son's tax return. He worked in New York State, and he also had income from Massachusetts.
Okay.
But he claims that the income from Massachusetts, they took New York State taxes out of.
No, probably. Now, is he a New York resident for the whole year, Dan?
Well, he lives in Massachusetts
As a student?
as a student.
Okay, so
Oh.
when he worked in Massachusetts, they didn't withhold New York State taxes.
That's
No.
right.
Doesn't it say MA on the bottom of the W-2?
Yes, it does.
Okay, so you got to do a Massachusetts return. So you're going to do a Massachusetts return. He will probably get back most, if not all, of his withholding. Anything that you still have left on the plate in Massachusetts that they're going to tax him on, you're going to do a New York State 112R to get the money back that they were taxing him in Massachusetts on his New York return.
But he's going to do a non-resident Massachusetts.
He does a resident New York with a 112R and a Massachusetts return, and then any taxes that he pays in Massachusetts is going to be credited on the 112R.
Okay.
Okay?
So you were right. They wouldn't have taken New York out.
Right, they don't. They'll take out
Dan.
Massachusetts. Okay?
He's got to file 3 returns then.
Federal, New York, and Massachusetts. Yeah. We just out of curiosity, how much did he make in Massachusetts?
I believe it was around $2,500 last year.
Okay, how much is his Massachusetts withholding? You know?
I don't.
You don't know. Well, I mean, The $2,500 has to go on the New York return, and if he made any other money, if his income's going to be a little over $3,000, he's going to owe New York State taxes. So you certainly want to make sure you get him that credit for the mass taxes paid.
The
okay?
112R.
He claims the Massachusetts earnings on.
Yes. When you're a New York resident, you have to claim all income earned everywhere. Okay? When you're a New York State resident, then they give you a credit for taxes paid to non-New York State jurisdictions while you were a New York State resident, and that's done on the form 112R.
I see. Okay.
Okay?
Thank you.
Thank you, sir. I'm Esther Gilius, the tax lady from EG Tax. We're going to take a quick break, and we'll be back on the other side, 8030930, 8030930, star 930 on a cell phone with your calls.
You are my family.
We think of you as family. I'm Esther Gilius, the tax lady from EG Tax, and we certainly think a lot about your taxes. We try to think about your situation like it was ours, because we really care about you, right, Dev?
Absolutely.
Yep.
That's what I was saying.
Yep. All right. So we're talking about New York State issues today, but I tell you, any issue we will certainly address. 8030930, 8030930, star 930 on a cell phone. Text us at 3930, and we're going to go to Mike, who's held so long. Hi, Mike.
Hi, Esther. I have a question about a rental property.
Yeah.
I was thinking about replacing my windows in that
Rental.
this year.
Mm-hmm.
And can I do a 179 on the windows for 1 year, or is that still depreciated over numerous years?
He can do. Can he do the election, the safe harbor election?
Right. The windows may qualify for the special election
Safe
on
harbor.
the federal, but not on New York State.
It's up to if the windows were less than $2,500, and the depreciation life has to be less than 20 years.
Right, and so it all depends on the total cost.
It has to be less than $2,500 for the safe harbor election.
Okay.
How much were the windows?
Well, I haven't gotten an estimate yet.
Yeah.
Being off.
Right. So the safe harbor election is for anything $2,500 or less, and so you can make that election, but the state of New York will make you add back in the extra depreciation that you've taken because they don't allow that election.
Okay.
Okay.
Yeah, and so
All right. Thanks a lot.
rentals are great. I just did a rental sale today, and so all those suspended losses came alive for him today. So he left so happy. He went and bought me a big Tim Hortons coffee. He's like, "This is the least I can do for you."
So what happens when you have income over $150,000 and you have rental property, and the rental property is operating at a loss primarily because of the depreciation? All of those losses you can't take them. They kind of pile up like a bank account. Then when you sell the property and you got to add back in the depreciation and things of that nature, then these losses that were in the bank account kind of come alive, and it offsets the gain. So
Yeah, he was thrilled.
all right. So I know we got calls coming in 8030930. 8030930, star 930 on a cell phone, and you can text us at 3930. Wanted to talk about the other things in New York State. Interest from federal bonds, all right?
Right.
Like U.S. savings bonds, they're taxable on the federal. It's a subtraction on New York State. So a lot of times people have saved up and saved up and saved up, and now, oh my gosh, we cashed in our bonds, we got $25,000 in interest. That's taxable on the federal, but it's a subtraction on New York State.
Yep, that's right. So you make sure you subtract that
And then,
bond
of
interest.
course, the other thing is other moving expense. Like, for instance, moving expenses aren't deductible on the federal, but they are in New York State.
Yep.
So even though if you moved because of your job and you couldn't take it on the federal, you can take it on New York State. And a lot of people just kind of gloss all over that. They don't think about that.
I did one of those the other day. Yep. And it was for a part-year person who was a part-year New York resident, and he moved into New York for a job. So I did it on a 203.
Right.
Yep.
And then some other things that people need to be aware of is the earned income credit. Now, the earned income credit on the federal is for people that have basically income like under $52,000 with children and wages, and basically they give you money.
Right. It's 30% generally of what the federal earned income
And
credit
the
is.
state of New York gives you a refundable earned income credit, just like the federal. And so make sure that if you have kids, or if you're not a kid, if you're not a kid yourself, if you're between the ages of 25 and 65 and you have wages and your income is relatively low, you could also qualify for the earned income credit on the federal and also on New York State.
Yep. I have one of my clients, and he's a disabled, and has a pension, and he's a disabled person. And so we roll up his pension to wages, and he qualifies for the New York earned income credit and the federal
Because
earned
he's
income credit.
disabled
Because
and he's under regular retirement age. Okay, let's go to Mike. Hey, Mike, how are you, sir?
Hello.
Hey, Mike.
I have a question about long-term disability benefits.
Yeah.
So back in 16, I had paid into a policy through my employer after tax and got benefits from it, long-term benefits. And as part of the policy, I had to assist this insurance carrier in recovering my Social Security benefits. And now in 2019, I get an SSA 1099. Is that a taxable event for me? I had premiums deducted post-tax, and the purpose of that.
Okay, but you're mixing up apples and oranges, because the disability benefits you were receiving was not Social Security disability. It was just it was non-taxable benefits. Somehow, then Social Security reconciled it with your tax-free benefits, and now you have Social Security, which may or may not be taxable. It all depends on your income and the amount of Social Security you received. May I ask what that figure is?
Oh, it was about $24,000.
Okay, so, and are you a married gentleman or single?
Married.
All right, and does your spouse also have Social Security?
No.
Is your spouse working?
Yes, but these benefits go back to 17 and 16.
Okay, so you can do a lump sum election. You can take a look at a lump sum election to average it out for the way it would have been claimed on 17 and 16. I'd have to look at it to see how the whole thing works, but it is potentially taxable, yes.
Even though I had this premium post.
Right. They reconciled it with the tax-free benefits you got, and they somehow took the money from those benefits to pay Social Security, and they're calling them Social Security benefits now. May not be taxable. It all depends on what your incomes were in those base years.
Oh, I'm sure they'll be taxable.
Yeah, well, then it might be 80. If half the Social Security added to all your other income exceeds $32,000, then the excess over $32,000 is half taxable until it gets to 85%.
So it has the fact that I had post-tax.
Well, again, like I said, you can go back and look at doing a lump sum election on 16 and 17 because that's at the bottom of your SSA form, right?
He wouldn't qualify for the IRC adjustment, would he?
No, because it's not repayment in the same year.
Yeah.
So that's it. I mean, if you want to take copies of your SSA form and send it to us, I'll be very happy to look at it for you.
All right, thank you.
All right, thank you. Bye-bye.
Call the office 632-7886 if you need details.
Right, and this way we can take a look at it.
Yeah.
Okay, let's take a look here. We got Frank. Hey, Frank. How are you, Frank?
Oh, hi. How you doing, Esther?
Good.
I have a question. My sister passed away last year, and I inherited part of her IRA.
Yep.
Now, I already have 3 IRAs of my own, which I take distributions on. I was wondering, do I have to take a distribution on this one?
Yes, you do. You inherited it in what year?
Well, I went to the bank in November.
Okay, so if you inherited it last year, did you take the option to roll it over and have it annuitized, or take it over a 5-year period, or take it all out?
Well, they just transferred everything over to me. That's all I know.
All right, so you got the whole thing?
My part, yeah.
Okay, so you didn't spread it out. The whole thing's going to be taxable then.
I got about $38,000.
Yeah, that wasn't a very. And just for anybody else listening, before you get money, if you want to give us a call, there's no charge. We'll give you the options of what you could do. But what our friend Frank here had the option of doing is rolling that all over into an IRA, and he could have spread it out over a 5-year period or his life expectancy, whichever he preferred. But because they gave it all to him, the whole thing's going to be taxable
This year?
this year.
I have to pay taxes on all 38?
Right. You better make sure it was. You sure it wasn't rolled over into another IRA? They actually gave you a check.
Or you annuitized it.
I mean, you got a check, right, Frank?
No, I didn't get a check.
Is it in an IRA?
Yeah, it's in an IRA under my name.
Okay. So now what you need to do is, who was handling that for you?
Well, I just went to the bank, the bank officer. He put it into, he wouldn't give me any tax advice.
Okay, so you need to you know what you need to do is hang on for a second. I got a break for the news, and I'll talk to you on the other side, okay? Just don't hang up, all right?
No, I won't.
All right, thanks a lot, Frank. I'm Esther Gulius, the tax lady from EG Tax. We got a break for news. We'll talk to you on the other side. I got all my sisters with me. Hey, I'm Esther Gulius, the tax lady from EG Tax. We're talking taxes, we're talking New York State, and we're talking to Frank. Okay, so Frank, you can make an election to take that over a 5-year period or annuitize it if it's in an IRA. So I don't know what happened, but that's what it sounds like. It's in an IRA. So you can either spread it out over 5 years or annuitize it based upon your life expectancy. So what you need to do is go on Monday to the bank and find out if for sure that it's in an IRA, that you just didn't open up a bank account. If you open up a bank account, then it's not so good, because then it'd be fully taxable and you would have gotten a 1099-R form. So you haven't gotten a form for it at all?
Yeah, I got a 1099, yeah.
Okay, so tell me what box 1 says on the 1099-R.
I don't have it with me.
Oh, shoot. Okay, but the whole thing is, do that, and you can give us a call, or you can go to our website at dgtax.com, ask the tax lady. That'll come right to me, and just say, Esther, I went to the bank, and it's just in a savings account, or I got my 1099-R, box 1 says this, and I can correspond with you, okay?
Okay, Esther.
All right, thanks, Frank. Bye-bye. Good luck. It can be pretty bad if... For poor Frank.
And he did get a 1099-R. So
yeah, well, but you don't know what it says,
right? And you don't know about.
I don't know
box
if he
2.
made the election. I don't know if anybody helped him, and that's the sad thing. People don't know who to turn to,
right?
You know, and you can always give us a call.
Yeah,
so.
There was one of my clients earlier this year, and he got his mom passed away, and it was money from an annuity, so there was nothing taxable in box 2. So he had to go back and find out what the basis was in that annuity, and so there's all these little intricacies, right?
Right, that's right. Okay, I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. We got a text here.
We do. When taking profits on a sale of a stock, what are the income tax laws? Well,
okay, so when you sell a capital asset, and we talked about this last week with Chris. Yeah. Everything's a capital asset except for depreciable assets, inventory, cash. There's a small list of what isn't a capital asset. But when you sell a capital asset, if it's a personal capital asset and it's sold at a loss, then you don't have to worry about it because it's going to be not taxable. Like, for instance, if you have a garage sale and you're selling a wheelbarrow that you paid $150 for and you're selling it for $25, that's a personal capital asset, but it's not taxable because it's a loss. But if it's a normal capital asset like stocks, bonds, etc., you would report that on a Schedule D. If it's held for more than a year, then it's a long-term capital gain. And if it's held for a year or less, then it's a short-term capital gain.
And if it's a long-term and you're in a tax bracket of 15% or less, it's taxed at 0%. which is so cool, right? And you're reading the next text. I love Esther's singing voice. She needs to make a Christmas album. She could call it Christmas Favorites, Tossing Tinsel with the Tax Lady.
There you go.
Right.
That's it.
So did I answer that good? If they're in the less than 15% tax
That's
bracket.
perfect. Of course.
0%.
Okay, let's go back to the phones, and we got Sheila. Hey, Sheila, how can we help you? Hi, Sheila.
For taking my call.
Yeah.
I have a question as far as if you're receiving compensation from your employer. Would I expect to be getting some type of like W-2 form for the amount of compensation that?
Are you talking about workman's comp?
Yes.
Workman's comp is tax-free.
So there's no documentation whatsoever?
Nope, because it's tax-free.
Yay.
I just figured there should be some paperwork to...
Well, right now, Sheila, don't give them any ideas because it's tax-free.
There is no paperwork.
No, it's like, for instance, welfare benefits are tax-free. They don't send anything out. Child support is tax-free. They don't send anything out. Workers' comp is tax-free. They don't send anything out because it's tax-free.
Oh.
Gifts of cash, tax-free.
I see.
Okay? I hope you feel better.
Thanks, I appreciate it.
All right, thanks, Sheila.
Bye-bye.
Bye-bye. Okay, I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Text us at 3930, and we're going to go to Doug. Hi, Doug.
Hello.
Hi.
Hi. My father passed away last year.
Oh, sorry to hear it.
Yeah, and he had something through TIAA, a SUNY type thing where he had to take RMDs and was a beneficiary of that.
Mm-hmm.
And I understand that it was New York State tax-free to him. Is it also New York State tax-free to me as a beneficiary?
No. No,
Regrettably.
the first 20,000 is.
The first 20,000, but the money I get as RMDs from...
Right. The first 20,000, let's say that, how many beneficiaries were there, Doug?
There were 3.
Okay, so collectively you guys got to split the 20.
As long
because
as
Dad was over the 59 and a half, right?
Yes.
Yeah. So collectively, you guys got to split that $20,000 exclusion. So if the amount that you're receiving is collectively $10,000, each one of you would be able to take the full. If you got 33, everybody be able to exclude that on New York State as long as it's under the $20,000 figure.
Okay.
Okay.
Yes, thank you.
All right, thank you, sir.
Hey,
Bye-bye.
Esther, can I go back to that text about the selling of stock?
Yeah.
I just want to remember, it just bears repeating, it's important, that if there's ever been reinvested dividends or capital gains, that all adds to the basis so that the gain is less. And so I just want everybody to be aware of that.
Many people are afraid of capital gains. Actually, capital gains are a really deal. I would love to get taxed on capital gains for my wages as opposed to my wages, because wages are taxed as ordinary income and you pay regular tax rates on that.
Right.
Capital gains, when they're long-term capital gains, are given preferential tax treatment, and if you're in the 15% bracket or lower, you pay zero.
Yep.
Zero, zip, nada. As a matter of fact, I had a client the other day that said, "Oh, I'm just going to get killed. I got some gains in the market," but his income wasn't that high. His other income wasn't that high, and he paid nothing.
Wow.
And he said, "I can't believe that. He was dancing out of the office." You know.
Good.
Right. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 3930. All right, other things people need to know about. The child tax credit on New York State. There's a federal child tax credit. And the other thing that people don't know, it's not just for children. It can be for disabled spouses.
Right. That's
let's say that you have a spouse that's disabled, and for you to go to work, you have to get some kind of care for them. Well, it qualifies for the federal and the state child and dependent care credit in order for you to work. So you have to have wages. And on the state of New York, if your income is relatively low, it's a refundable credit up to 110% of the federal child and dependent care credit. And that's a lot of money, because a lot of times people won't be able to get the child independent care credit on the federal because their income's so low. So they forget about it on New York State. But New York State could give you up to 110% of the federal. So if the federal credit was supposed to be, I don't know, $600, you could get, yes?
Oh, I would never want me to read that
Yeah,
text?
you could get 110% of the federal that you didn't qualify for because that was a non-refundable, but on New York State, it's refundable.
It says, do I file taxes when I get nothing but Social Security disability? I live by myself and rent. I heard something about maybe I'm able to file federal, etc., even when I have no earned income with qualifying children. Thank you.
Yeah, the only thing that this person could get would be the renter's credit. There's a renter's credit on New York State if your income is low enough,
but
where they basically give you part of the rent that you paid back as a refundable credit.
Yeah. What this person should do is get a job and work a little bit, maybe do some self-employment.
But Social Security disability would say that they're unable to work.
What, can't they work a little bit? Less than
well,
13,000,
if you're on Social
14,000?
Security disability, many times they're just unable to work at all.
This
But
is
it is true that if you are on disability, they give you kind of a
little bit.
opportunity to come back into the workforce where you don't lose your benefits.
Right.
So,
yeah.
Okay. So the child independent care credit, and remember, it's dependent care too. And it even works if, let's say, mom is working and dad went back to school. You can still get the child independent care credit for kids for your children or somebody that's disabled, your disabled child. And could be a child over the age of 13 if they're disabled.
That's right.
So this is a broader credit than many people know about. And then there's the Empire State Child Tax Credit, which is between kids between the ages of
4 and 17.
Right, 4. It must be they aren't good enough at
Governor
4.
Cuomo is trying to pass a law, so it's for kids less than 4.
Well, that would be nice.
Yeah, 3.
But same thing like on the federal. The federal has the child tax credit, which is $2,000. State of New York has the Empire State Tax Credit, and so you as soon as your kid turns 17, that credit goes away on the state as well.
It does.
Right?
It matches. Yep. And it's $330 a child. If you make a lot of money, it starts getting phased out just as the federal does too.
Right. Then there's the education credit. Now on the federal, there's an education credit, which is partially refundable. On the state of New York, there's also a credit, an education credit. If the education credit on the state of New York is not as restricted as the education credit is on the federal for higher income earners.
Right.
So many times, if you don't qualify for the federal credit, you will still qualify for the New York State education credit, up to $10,000 on the first 4 years of continuing education. So you said today you had somebody that missed somebody else, another accounting firm missed it.
Yeah, that's right. And so what they did is the person made too much money and didn't qualify, excuse me, for the college credit on the federal, but they would have qualified for the 272 on New York. And so they were like, maybe the accountant was like, they don't qualify for the federal, but New York State, the income limits don't apply. And so they qualified for the 272, which is a college credit on the New York return. So I amended it and I moved it to an itemized deduction and got them about $600 back.
Right. And it's phenomenal.
Right.
So if you didn't get the education credit because your income's too high, you still qualify on New York State.
Yep.
Other thing is firefighters credit. If you're somebody that volunteers at a fire department, your firefighters, you get a $200 firefighters credit, and you also get a subtraction for your firefighters. This is hard to say. Firefighters service award.
Say that 10 times. Stay fast.
So, and that's another thing, and that's a subtraction on New York State. And this is another one, and I know we got calls coming in. The bed tax.
Oh, yeah.
I did a tax return a couple of days ago for a lovely lady whose aunt is in a nursing home, and she's under private pay. So she's paying about $144,000 a year. New York State has a 6% bed tax that they assess the nursing homes for private pay patients. That's refundable.
Yep. which is, it's actually too bad that New York State even charges it to people.
Right, because you're supposed to get it back.
Yeah.
So that's another big credit. So you multiply 6% by $144,000. That's about $8,000 that you get back. And if you don't ask for it, they're not going to give it back to you.
So you make sure you ask for it.
Okay. All right. Let's go back to the phones, and we're going to talk to Mike. Hi, Mike.
Hello, Esther.
Hey, what's happening?
I retired last year, and I started collecting Social Security.
Okay.
But I also kept putting money into my IRA.
Oh, okay. Well, that's not necessarily wrong.
So I had to fill out the 3 worksheets for publication 590.
Well, didn't you work at all last year, Mike?
Yes, I did.
Okay, so why you can still put money into an IRA as long as you had wages last year. And if you had wages and you were under the income limitation, there's nothing wrong with putting money in your IRA unless you were over the age of 70 and a half.
Yes, I know that. But I had to fill out the 3 worksheets for publication 590 to find the taxable amount of my Social Security.
Oh, that's what you want to know. Okay.
But so I got that figure.
Okay.
Down on line 8A of Form 1040, it says adjustments to income. Do I still put the amount that I put in my IRA on that line?
Right, as long as you qualified, yes. As long as you have a traditional IRA and you didn't have, your income wasn't too high and you weren't covered under a qualified pension plan, and you had wages, yes, you would put that there. So you'd have the taxable Social Security, but your Social Security computation is going to be, you're going to use that contribution to your IRA to reduce the possibility of the taxable Social Security in your computation. Did you do that, Mike?
I'm not sure I know what you mean.
In other words, the IRA contribution is going to reduce your adjusted gross income.
Okay.
Which would then reduce the taxable Social Security.
So then it seems like I'm deducting it twice.
Well, not really. You're deducting it in the computation of the taxable Social Security, yes. But it's a real deduction when you're doing the tax return. So one is to determine whether your Social Security is taxable, and the other one is what's taxable on your tax return. So one makes the Social Security less taxable. The other one makes the income tax less taxable. The overall income less taxable.
Okay. I don't quite understand that, but okay.
Okay. I'm sorry. If you want to go to my website, email me, and I'll try to explain it better with an example. And I don't have time to do it right now.
There's 2 text messages. One of them is really easy. Does the bed tax also apply to rehab facilities? The answer is no.
No, it's got to be a full skilled nursing facility. Yep. So because the skilled facility is the one where they're assessing the bed tax.
Yep. And the other one says, my mom passed away in September. No assets, no estate, no will. I can't read all of that.
Well, whatever. Let's see.
It says, I received. You got to scroll down
here. Well, anyway. All right. So, and let's say that her mom did pass away and had no assets. No, like for instance, my mom was in a nursing home and she passed away in December and she had no assets. But if she were a private pay patient for part of the year, in those months that she was private pay in the nursing home, she would have gotten a refund after her death if I filed the IT-258. Mm-hmm. You got it? Oh, you really messed that up, Tiff. Okay, let's go back to the phones and we're going to talk. The text is all messed up at BEN. I'm Esther Julius, the tax lady. How are you?
Frank
how can I help you?
Is shaking his head. I don't think he thinks. I think he thinks.
Hi, Lori. How can I help you?
Yes. My husband got injured at work and started getting workman's comp in October.
Okay.
So, so it would be the 3 months for 2019.
Yep.
So how do we?
It's not taxable. You don't put it on the return.
Okay. And he also had a private policy through work. It was only a 6-month one, so I don't know how that income would.
If he had a private policy where he was paying for his own disability, then it's not going to be taxable either.
Oh, okay.
Okay?
All right. Thank you so much.
Thanks, Lori. Bye-bye. Okay, and we're going to go to Carol in Depew. Hi,
Frank,
Carol.
you're good.
Hi. You just mentioned about volunteer firemen.
Yeah.
Didn't get the whole. We know about the 200, but then you said about the service awards.
Right. That's tax-free, too.
He gets 600 a month.
Uh-huh.
And we have taxes taken out right from the beginning. So he gets 540. Now we use that as income, right?
It's income on the federal, and on the state of New York, you back it off. It's a subtraction.
I don't think we did that.
Well, then you can amend your return.
16, 17, and 18. 16 is about to sunset April 15th.
The tax return. So 16 is going to close on April the 15th, so you can get your money back on 16, 17, and 18.
Wow.
Yep. I do it all the time for people.
Okay,
who
Carol?
do the same thing.
So much.
Thank you, dear.
My pleasure.
Bye-bye.
You want me to read the text now?
Yeah, read the text.
My mom passed
we
away
had
in
to have it
September.
rescued.
Yeah, sorry. No assets, no estate, no will. I received her W-2 from work and her Social Security tax form. So she has a W-2. Am I doing next able to file her taxes? If so, how do I go about it? Can I e-file or do I have to file a paper return? Thank you.
Okay, so if you're doing her tax return, her final return, and she has a W-2, she might have some withholding. So you're going to do an electronic return, and you're going to file a form 1310 because the refund that's for refund due deceased taxpayer, and you can still file it pending that certain stipulations happen
That's court
with
appointed.
the court-appointed person. So yes, you're going to file a
Potentially,
return.
you could do it
Probably you'll file it electronically.
Yep, with the 1310.
With the 1310. Okay?
Good question.
All right, that's good. I'm Esther Golias, the tax lady from EG Tax. I want to talk about some other things here before, because I knew people didn't know about these things. You know?
You were right.
So the bed tax, renter's credit, if you have a house that's worth less than 85, they have not upped that in a million years.
They need to update that.
I'm telling you. So if your house
Fair
is worth
market
less than
value.
$85,000,
Right.
you're paying property taxes, you can get a possible refund using Form IT 214. And if you're a renter and you're a low-income person, and this includes your Social Security.
And you can't make more than $18,000 a year, which is really low, too.
Right. And then there's if you're a non-custodial parent that would normally have, in other words, the kids don't live with you, then you would have normally lived, would have gotten an earned income credit if you could have claimed the kids or the kids live near you. There's a refundable earned income credit for non-custodial parents in New York State.
Yeah.
The other thing is, like we talked about with this gentleman at the beginning of the show, if you have income, if you're a New York State resident, you pay taxes in another state, you get a credit for those taxes paid to the other state on the New York State resident
112R.
credit.
The non-custodial earned income credit, don't forget, in order to qualify for that, it has to come through a support unit through New York State, and you also cannot be behind on your child support, and
All
the
right.
kids have to be less than
And the other thing is
17,
I've been doing
18.
a number of the solar energy system equipment credits. Just a word to the wise, when they're selling those units, they make it sound like you're going to get a 30% federal credit and a 20% New York State credit. That's not really true. It's 30% of the actual cost on the federal, but it's a non-refundable credit. Okay, so if you don't have to file a tax return and you have no taxes, you don't get anything on either the federal or the state. But let's say that you do put the solar in and it's a 30% credit and you're paying $20,000 for the solar stuff, which would be 3 times $6,000, and your liability on the federal is only 2. You're only going to get 2, and on the state of New York, it's 20% on a maximum of 5. So don't be hoodwinked
I just
into
did
that stuff.
an adoption credit this year, and the same thing. A lady adopted the child. She didn't have much liability, and only goes up to eat your liability.
But that
up
at
and-
least carries forward.
Yeah, it does.
Yeah. Okay, I'm Esther Golias, the tax lady. I got to run back to the office. If you need the best tax help, you got questions, you can email us through our website. Until next Saturday, I'm Esther Golias with Tiffany Fabian. We love you guys. God bless. Bye-bye.